Good day, happy Tuesday. How are you today? Please give me some okay, you can hear me? And you can see my screen? Perfect. Thank you very much, guys. So let's begin. Thank you guys. Thank you. I got a point. So we have some moves. Basically, it's coming from the Pacific pairs, and let's go over them. Some of them gave us setups already, some of them on the way. But before that, I would like to go over the DAX, which now shows some warning signs. We are bearish. Our short-term invalidation is this high. This is the invalidation area for the short term. For one reason, because that was the two-wave retrace that was broken, right? And this is the last high that has to be respected. If for any reason the instrument goes above this high, then it means that the correction could be simply deeper to the upside, and we will have to watch how it develops, the whole idea with the DAX. Meanwhile, as long as this top holds, the breakout, of course, is relevant. We're still looking for the sells, but there is one thing to pay attention to, that the retrace was in one wave. That was the last move down. This is the move up. One straight move, one straight leg through all the Fibonacci levels. This is normally a sign that we will want to say, okay, warning, cautious, maybe the market is not on the conditions we want to trade, and the conditions are more aggressive now, which means the risk, if there comes any setup with any of the systems used, the conditions and the risk must be smaller, lower, right? Because again, we don't want to find ourselves in a place like we were trying to convince the market, but you should crash. We have to listen to the signs. The whole principle was two-wave retrace, breakout. Yes, we didn't have any lower lows yet, but this breakout is good. That means as long as we are below this area, we are after sell setups, rallies and sells. And then came the rally, but the rally was one straight leg. Of course, it's still relevant, right? Sometimes the pullbacks are deeper. There is still bearish hidden divergence. Everything is still in the line. But the fact it is one straight leg through all the Fibonacci retraces makes it as a warning sign. And the risk, if there will be any setup with the systems we trade, must be accordingly lower. Okay, this is the first one I would like to start with, as it's the latest development. Back to Forex, Pacifics. Aussie dollar was and still is one of the stars. We're still in the range, so our idea was to go back to the bottom of the range, which we did yesterday, and look for the setups. The setup, if the range is in the 4-hour chart, setups could be in a 4-hour chart and the 1-hour chart. Basically, we got the drop down, we got this two waves movement, trendline breakout, bullish divergence, and the continuation further. So for the intraday, that's basically the perfect conditions for the intraday trading, short-term trading. For the longer term, we are still waiting to see how it will behave out of the range. We wanted to go above, we wanted to gain the momentum to give us a real understanding that, hey, here we are, the bulls, right? It didn't happen yet. Therefore, as long as we're stuck inside, and inside the range, the trading is for the short term and short term only. So the Aussie dollar gave us what we wanted to see. Same was with the New Zealandian dollar, as it gave us two waves retrace to the downside. Personally, here we are, right? I always prefer to look for two waves in that case There's the two candles rule activated here. That's the two waves, and here is the breakout. The two waves here is required, not just one wave. Why? Because we're still stuck inside this range, and the main fact is that the last divergence on the 4-hour chart is bearish hidden, right? If the last divergence on the 4-hour chart is bearish hidden, then the 1 hour must be a corrective cycle. Corrective cycle means the waves retrace or a range. That's why. And the corrective cycle could happen same time frame or one lower time frame. In that case, it happened one lower time frame. And we got the breakout. So New Zealand also, it's moving much slower than the Australian dollar, but it's also the going so far in the direction wanted. And our plan was and remains, as long as we are above the invalidation, look for buys. Okay. We will, however, of course, want that to start and gain higher highs, higher lows. It does make higher lows, but no higher highs yet. So the structure is still suffering. The momentum is still short term only because of that, right? And that means the trading is still short term. We have no real signs yet for reversals confirmed with the daily and the 4-hour chart combos. Euro Aussie is another one that we have on the list. We have all the range and the 61.8 as levels to watch for the sells. Meanwhile, it is still holding the range. That's still the case. We got the two waves here, double top, bearish divergence, right? If we break above the range, we can accept it towards 61.8. If the range holds, we are looking for the possibilities to sell the tops. So that was the two waves inside and the double top scenario, bearish divergence. In that case, the 1-hour chart might provide better entry, but in that case it did not, simply because we have no two candles rule in play here, so we can't use this trend line. Therefore, the only big view is the 4-hour chart trend line and these breakouts. So we are bearish as long as the top holds. Basically, we are bearish in general for this pair, right? For us, the plan was and remains look for the sells. The only thing we accept here is if we get out of the range and holds, the shorter can take us towards 61.8, where from we are going to again look for the sells. But as for now, the range still holds. And the same exactly happens with the pound Aussie, which holds its current structure of the lower highs, lower lows. So for us, the plan is sell the rallies. It was and remains the same. We have no opposite signs on a daily or anything like that, so it's for the sells. The pound Kiwi not really moving, so there is no clear setup currently, but we want to see rallies for a sell as well. Aussie Kiwi is the pair to discuss. That was the levels we have. This and this. Right? So that was the place where we are looking for the buys if we manage to go below the range. Right? We got a false break, and that makes us a ranging pattern. But the thing is with this pair, it refuses to break below the range. And it's holding the lows with the bullish divergence. So that could be a very good call if we go and break the trend line and start to create a structure of higher highs, that the long-term buys came back in play. After all, we are bullish here yet. We got the pullback from the daily 61.8. This just a reminder, yeah. This was our 61.8. We got the pullback. The pullback could be in two waves or a range, right? Corrective cycle, and we got a range. Meanwhile, it's holding the bottom of the range, so if we break and hold the trend line, as long as this one holds, that could be the doors opener towards 111, 112. Of course, if the range is broken down, we are going for the two bigger corrections, as shown before, right? Here and here. But our goal was and remains long-term buys. That's the whole plan. Okay, and for the short-term, the sales were acceptable, and this is the sign to say enough. Once the divergence is triggered, the low is holding, divergence is triggered, game over. There is no reason to look for short-term sales currently, right? Well, anyway, as long as the low and the range hold. So the short-term sales lose their value, I would say, right? It's not worth to waste time on that. Look for buy dips for the longer run, definitely is good. Daily and weekly are all lined up for the buys. Okay, next one. Where is my next one? Yen pairs. Here is the euro yen, which we were bearish and we still remain bearish for the as long as we don't have the 4-hour and daily reversing us. But pay attention to the daily chart. This is the beginning of a reversal. We might still make some new low, fake low, or any kind of structure like that, but this is a cycle, ending cycle. It has the level 161.8 of this. It has the divergence. It has the structure of a triple or special cycle, doesn't matter how you name that. The idea is the same. It's running out of gas. So the euro yen, the short-term sales become now not interesting, right? Yesterday we did not have any divergence, so sell rallies was a great plan, and we got sell rallies. And now we should be careful. The divergence is developing, one false break is in place, so yeah, it can make one more fake breakout, it could, but it limits it to very tiny moves, very small moves, which we don't really want to waste our energies to fight, right? That could start and make two waves retraces before next portion of the sales. Okay, so for all those of you who were or who still are in the cells, this structure starts to look like a place to start and cashing out. The best scenario, of course, would be if we get a false breaks and higher highs start to turn, right? Then it's a cash out completely. Meanwhile, short-term cash outs could be a good idea. The best thing for re-entries would be if we get a corrective cycle, a range, or two waves, and the next portion. Okay, so yes, we are still bearish, but we want, if you did not ride the current move, then let the correction go into two waves or a range before you are looking for the next sells. It's important, right? Once we have the signs against, we want to play more conservative. As long as we don't have signs against, we can play more aggressive and allow ourselves to take more risks, more freedom of a risk, right? But when the signs start to appear against, it's time to play smarter. Very simple. Even if in some cases it means miss a move. That's all. Same said with the Aussie yen, which we are of course bearish there for the long term, but this is the place where we get our signs against, the divergence against, and it starts to look like a possible triple double, or like this, triple and possible double scenario. The bullish divergence, bullish hidden divergence is in place. These start to look like a continuing divergence. Why to fight? right? Why to fight? So our plan was and remains sell with the weekly, which means 4-hour and daily must fit in. Daily last divergence is bearish hidden, so 4-hour should provide us also bearish hidden for sells or 2 waves for sells, right? Meanwhile, as we have the opposite divergence against us, it's time to cash out and get out. Wait for the next opportunity. That's what I want you always guys to remember. You have the signs against, don't look to be smarter than the market. It's impossible. Market always knows better. You have the signs against, especially when it comes from the higher time frames. If it comes from the higher time frames, don't try to be a hero. Better money in the pocket and look for the other opportunities than regret and say, oh, why I didn't do it, right? Always remember, at the end of the day, it's not about being right more times. It's not about making better calls. It's not about the ego or anything like that. Trading is to make money. And you can make money mainly when you listen to the market. You are great to trade when you don't have signs against you and all your time frames synchronized, rhymed in the same direction. And when you do have signs against you, get out. That's what you should remember. And to remind yourself, because let's admit it, it's too easy to forget it when you deal with the market and the market is moving, right? Especially when there is a lot of chat and then you're like, oh, I have to trade it, I have to trade it, I have to trade it, right? Because someone else trades. So it's important to stop for a second, remind yourself this little thing. It's never about being right, it's about listen to the market. Not always market has huge momentums. Many times the momentums are smaller. And in this period, the momentums are smaller. They are more random. They are more sudden. But they are there. They happen. They are just less impressive. And accordingly, you have the signs against. Don't try to be a hero. Okay? Don't look for signs against you on lower time frames. So, for example, if you trade the 4-hour chart, don't go to 15 minutes and say, but I have divergence against me. No. Lower time frames don't mean nothing. What does have a meaning is the current one you work with, the one that you enter and manage based on, and the higher. As long as they are free to go, go. Go. When they have the signs against, don't go. Wait for the validation. And it's simple. If you have the divergence against you on the current time frame, there has to be corrective cycle. Corrective cycle could be on current or one lower. Corrective cycle could be one of two options, 2 waves or a range. That's all. Okay, remember these things. Good. So let's continue. That's what I wanted to show, the yen pairs and their cash out. The dollar yen by itself, we warn, remains bearish. So the only thing we do need to remember here is the fact that the first leg was so impulsive, which we call it almost vertical. After vertical moves, what happens normally is ugly corrections. So we will not be surprised if we go through something like that now, before the next portion. However, the plan was and remains sells, so rallies to be sold. We got a rally yesterday with a bearish divergence, it's a sell. If we get a rally here in the second wave, it's a sell. Okay, as long as the setup you get is valid, it's a trade and it's valid. Our plan was and remains bearish yet for the dollar yen, and we are aiming the 38.2 at least of this cycle, which should bring us towards 110, ideally below 109, as long as the invalidation area holds. So our plan is bearish here. Okay, next one. Euro dollar still stuck in a range, also did not have any setup. Now take a look on the difference guys, between the Australian dollar, which we saw before, and the New Zealandian and the euro dollar. That was in two clear waves down, while the euro dollar makes it in one move down. That's the difference. Two candles rule. If we say this is a correction, then we need to check the last two candles, right? Two candles rule, not valid. We continue lower. This is a correction. No, last two candles, not valid. There is only one straight move. Therefore, the euro cannot provide yet any new buys. See the difference? While the Aussie dollar was a clear two waves. One, two, last two candles, and a breakout. That's the difference. And it's important to pay attention to it. Same with the pound dollar. No two candles rule applied here on the correction. Sorry. Here. Stuck on the same top, one straight move. We don't want to trade it. We want to wait for clearer setups. Very simple. Very, very simple. Okay, next. Let me check my list. Euro pound. Now, euro pound is now forming the second leg. There is one issue with that, divergence. Divergence seems not coming yet, right? There is divergence in the 4-hour chart. There is no divergence on the ending part of it here. This divergence seems making a breakout. Moving average also currently don't have nothing. So the short-term buys are still not even in a possible play. And maybe, just maybe, this is the beginning of a move that will break the trend line of the daily and will change that sell. Therefore, euro pound, which was and remains, yeah, as long as the trend line holds, as a possible buy continuation, currently does not have any buy confirmations. There are no divergences in play of the two leg, and this is where it comes from. Why do we require two legs here? Due to the triple double principle and the mirror, right? That's where we want to look for our buys. This is the zone, but there is no divergence currently, so we are not in a rush. What should we see here if we do want to go for the buys? Move, divergence to form. Ideally, a false break, trendline breakout, and we have the okay to start looking for the buys. That's basically validates the bullish scenario. If it doesn't happen, we have no reason to look for any buys. Okay, so we need to pay attention to that, and that's, let me just double check. Yep, that's all from my list. Any of the forex, of course. Anything from your list, guys, you want me to cover before I move to commodities? If there's any pair on your list, please let me know. Pound yen. Yes, pound yen is in engulfing. And also the divergence, right? Continuing divergence in play. Last two candles here activated, divergence, engulfing. As for now, game over for the short-term sells. This requires a correction. It's also a cycle by itself, right? Like we can name it as a special, we can name it as a double. The idea would remain the same. It requires a correction. false breaks. If we get a convergence, that even can start be some short-term buys, but the sell plan as it was currently becomes irrelevant. You have a cycle with divergence against you. That's exactly the situations where we need to tell ourselves, don't be a hero, stop looking for the sells, right? Game over. It was enough sells since the last week. Game over. No need to try to be smarter than the market. New Zealandian yen is a pair that I start to like. It did what I wanted it to do. Second leg to the downside. Start to form divergence. We have the levels. So Kiwi yen can start to make some beautiful further buys. CAD yen, pretty much same. Starts to be interesting. The zones are good. Start looking for possible buys. Well, of course, again, now we need to find a setup with the strategies you trade with, right? But we got the level, we got the pullback, we got a divergence, so it starts to look healthy. Okay, good. So we continue to the next commodities, gold and silver. Still, as I explained yesterday, on the aggressive approach only. From my point of view, as long as this low and this area of 1220 to 1200 holds, I would not deal with sells. From my point of view, drops to be bought. I expect here a fight from the buyers, and the reason for that is because this is a double cycle where each of the legs is a cycle by itself. That's a classical cycle with a divergence, with an alternative trendline false break. I don't want to avoid these conditions, even though there is nothing conservative for buys, for aggressive buy drops. From my point of view, is smarter thing. And we also have the dates confirming this low, right? It happened right on the 19th, which is the weekend, and we have all the 20s. And all the 20s is the exact time where we want to see the lows holding. So it has the place, it has the reason, it has the cycles. It doesn't have any clear conservative setup, but it's great for aggressive trading, for those, of course, who trade aggressive, and short-term only, because, let's admit it, we don't have any conditions for long-term trading. As simple as that. All right, so that's for the commodities. Oil unchanged in the plans. The natural gas also, we are waiting for higher highs. We still don't have them, so nothing really changed there. The German DAX explained, and that's basically all. Here is some interesting, Michael. Yes, that's the crystal ball. The statistical indicator I use here, that's the crystal ball. Yes. Okay. For cryptos, we should start to pay attention. Well, that's is actually stuck. Where is that? Here. The Bitcoin continues pretty impressive from my point of view. It would be a great place to get out with some profits due to the triple cycle and the divergence developing. We can start getting some corrections, and that might be effective also on crosses like we are in euro franc, right? We are short there, but we are reaching the critical levels. This is our long-term target, but this is the short-term target. 161.8, we are right there. Duplication of the last leg, we are right there. So, and this is the 4-hour chart, a special cycle by itself. Divergence start to appear. I would start, and for all those of you who are writing that, of course, Ethereum, Bitcoin, this is a good place for a cash out. The rest, I can't really say there is anything too crazy to go and trade. The Litecoin is moving in a channel, holding the structure of higher highs, higher lows, remains by drops. Well, Ripple is the only one that is sleeping currently. Dash, also nothing clear, no higher highs, higher lows yet, which makes it less attractive. The Monero is beautiful. Okay. Well, skipping the one spike. So far, continuing its structure as well. It looks pretty good from my point of view. Ripple and Dash, though, yeah, can't say I love them too much. And the Bitcoin Explained, Bitcoin, I would, where is that? Here. This is a good place for cash outs, at least partials, triple up, divergence. Daily starts to come to some extreme levels, like, it's a cash out zone from my point of view. So that's all for today, guys. Thank you for being here. I'll see you in the Telegram groups later, of course. And I wish you a wonderful day, happy trading, and all the best.